Welcome to TradeTheMBI.com. This is John. This report is for November the 1st, and well, didn't take long for that little dip of the orange going below, and it happened right at the 23%. We had a little bit of a retrace that happened after the beginning. Well, it's been a continuation push is what's really happened, and it came right off of the numbers that we had pre-spelled out from our algorithm resets, and the 35 was the first one, then 2600 came within just 3 points of that. As you can see, that's what the low was. And then the turnaround really, and it creates what I effectively refer to as that delta V reversal, where you close up and then boom, the next bar closes all the way, usually up towards the high of it, which it did, and then the second one completely eclipsing it. That's a signal that you've completely negated the previous run, and then boom, you get a little continuation from that. Very clear for us, as soon as the cyan and green meet, green needs to move above. If it doesn't, then our short-term push-up has ended. Now, why do I call it a short-term push-up? Because we didn't get any reset of the steel. This effectively makes it look like it's coming from underneath, but as soon as it pivots down, you're going to have a problem, and it's going to usually be that pullback, and usually what that will be that 50% pullback retrace, but it's a little early for that right now. You would think that we would have to get past the 38%, but now we're hitting up against these other previous algo numbers, 731, and then 62 further ahead of that. So those are all something that should just be present in your mind. Yeah, it's worth keeping track of. You'll notice that this is the, well, I need to click actual paint bar. The Dealcom paint. If I go to format for this, you'll notice these plot values right here. So here we go with the daily, and what this does is it allows these prints to come in. So what are we looking at? No orange. No orange meant that the orange had not dipped below the red at the time of the signal, that it was premature, which it was. It eventually did, but you can see that when it did it, it pretty much turned out to be the end of the line for it, and we pretty much got the cyan rejection of that really pretty much right here at the start of this candle on the 50%, and we've had that subsequent move from there. Now, this most recent one, we've developed a P2. What's a P2? Well, it's the second pivot of the red, DOC, and you can see that pivot is higher in relation to the previous pivot. Let me go ahead and get my drawing marker, and we can see. So there's definitely an angle upward of that, which indicates that you had the rising. Now, P3 would just mean that it happened in a higher zone. So here it happened between -7 and the -13, and likewise, but just at a higher level, and that's why it's P3, and you can see price then continued, and we ended up with another one of those as it was continuing to rise right up near the peak, right before we ended up getting very close to our DOC spread, which once that took place, boom. So that's what you can do with the paint bar, and I'll show you a little later how I approach it with the additional paint bars and have it as a background so that you can see it. The euro did not overnight become powerful. This is central bank involvement, clearly at the lows, just the buyback jump. It's problematic because you can't really get much of an S&P improvement without seeing some positive aspect from the euro, given the fact that there's so much earnings created from European companies. But everyone in Europe is looking for any sign of stability. Just something to grab a hold of. This is going to change the growth picture. Interestingly, too, you're getting this decline in bonds to match yields. This is kind of antithetical to the notion of Republicans losing control of the House, because you would expect at that point rising treasuries, because the Fed would stop raising rates and it would go more into a neutral stance. This is suggesting the opposite, so it's interesting to see that. Not quite what we expected, and as well, oil has retraced that full pop-up move that was just beautiful in time for summer to cause a little bit of inflationary thing. This is actually right back into that range from before, which actually positive for the economy in a big way, which has also caused gold to suffer because there's no crisis with that. You would think that if there was a great deal of uncertainty with the election, as there was during this period, you get that bump up. Some people are seeming to have much more clarity going into it with the week, at least some people with money, and the ones that, in my view, know the most are the ones that have the most risk because it pays to know, as we can see with the algos. So here we go from the start of the day. This was a continuation move. I'm going to go ahead and slide this over and we can see that we were still continuing to move higher from the previous, and it's just beautiful when you see that cyan under red the whole way, and the steel not making any strong moves above red until well, we got all the way into the midday action right here. We started to, for the first time, see the potentials. Didn't change the red or anything, and even when you did get the cyan jumps, the orange moves, you weren't seeing a strong play from cyan. You got a couple with the green dips, and they produced. Don't get me wrong, they filled in some of it, but there were a lot of lines going through all of these ranges. And finally, as we started to peak out, we started to see more of the steel moves above red, kind of indicating, hey, we're getting a little bit long. And then we started making higher highs, and we're not matching the peak levels from back over here, which usually when that happens, it kind of gives me this range as sort of my expectation for which positive extremes are going to refill. Something to bear in mind when you're looking at that kind of divergence. So what is that level? Somewhere around the 2712 range. The low for this first dip was 2708. So yeah, pretty close within there. Something always to pay attention to when looking at that. So what you can see here is I'm running, no, not the fib level. I am running the fib level retrace, but it's the GAM function paper. But what I've done is added the Diocon paint to it, and by having the oldest one is usually the one that's going to show up. So the most recent one won't visually overprint. If I had put the DOC or the DO paint first, it would be showing up over the GAM function paint bar. So it's the one that you have first on your chart. So if you have an old Diocon paint and you want to do this, you would just have to delete it and then reinstall it, and then your GAM function would show. And then I just put the numbers in. And so in this particular case, it becomes poignant because I think it's worth looking at. So let me just scroll this over. Okay, so through Movie Magic, we scroll forward. So what we ended up here, and this is an interesting one to take a look at. So if I disable this, you're going to see yellow candles pop up with the no orange underneath it. Now, the yellow candle's coming in because you're getting a green crossover and you're getting a steel move all at the same time, and oftentimes they're going to produce a little bit of a pop. Now, we know that without the orange, it's not going to be a follow-through, but it's not for me to necessarily gauge for you how much or how many points you need, just to give you an idea of what's going to happen. I think this sometimes can be helpful in that aspect because, well, let me go ahead and show it to you. What we do is if you disable the current GAM function, you'll see what it looks like. So this one was a no, but this one, no objections because it fit all the criteria. And you can see it produced a much bigger return. Likewise, same situation here. This one, no orange support. And then you ended up with an actual long signal right over here with the yellow candle that led to the reset of this ABM and the full run. Likewise here, buy signal in the decline, put in a no orange signal. So it pretty much identifies the areas. Now this one is making new lows, so when that happens and you're in a downturn like this and you don't have some stability, These rarely do much and often stay below the 23%. And sure enough, not only did it not have an orange, it was making new lows. So this was a double, like, no, don't buy that. It's not going to go anywhere. And sure enough, it made new lows. So it did exactly the right thing. Some of the other configurations that I'll have to put into it will be that I'm adding that correspond to the pivots, because just because a pivot comes, if a pivot comes without proper backup to it, it's not going to be a long configuration either, because the pivot comes late here. The actual buy signal was the dip right there, but we all know that when you're below that negative 13.5, they don't tend to last. And that's just a question of looking for the orange popping back above green, which happens, literally within the next bar. And so that becomes one of those where you can either set your break even or you can take a small gain on a portion of it. Because people always ask me, so, well, how do I know which one I should just let run? And it's like, yeah, I want to see these kind where I'm getting steady improvement from my shakeout that then produce the clean buy like this setup did right here. It didn't qualify simply because it didn't, because green had not yet crossed red. I think in a lot of configurations you'll see this happen on knee-jerk pops that will take place. That it happens so fast that the red rises so quickly that the green can't even keep up. But I'm going to mark those situations that occur so that you'll be able to see them as well, and that'll be a supplement, because it can happen where you get a fast enough turnaround. It did retrace all the way back to it off of the had the clean signal until right about here. The orange starts to take over, and then boom, you get your DOC spread that took place right there. At the crossover point, and boom, it was pretty fast. Decline all the way to give it a double bottom, and turn around. It does create a P2. It's sort of hiding here in between the. Let me put the snap load on. You can see it building in comparison. Again, that's this relationship between this pivot and this pivot here, clearly higher in a much better zone, and that's produced this run up right now, which in the additional paint bar also happens to be gold candle simply because of the rising gold. So there's some terrific stuff in being able to see that, especially knowing that you're not going to get a bunch of these little false signals. So this is going to stay, if you were looking at it from a pure standpoint, this is all deep red going through, and even here doesn't change, not until you get down into these new lows and this turnaround right here, and then certainly on this setup right here as it comes through. So all good alterations, but even better, it's a clarity of how to read what the market signals are, and I think that ultimately proves to be the most significant part of it, because that really gives you an advantage. As always, though, I will keep putting up these kind of setups and adding to relevant details to make it even easier to follow along with some of these plays. We've just had a phenomenal. I don't think it's going to change. We're still going to get these significant ranges. We didn't even look at what the daily ATR is recently. Let's go ahead and pop that one up there. Can't hurt to do that. For me, it's just a matter of going to the window, you click the button, and it pops up. So we can see what the ATR is. 57.84 on a daily basis. That's pretty good. It's going to start coming down pretty quick. Even with these 20 and 30 point days, that's still significantly lower than what it was, because, at its peak here, we're up to 66 points. That's tough for people. This gets back to 2008 levels when we were looking at ATRs in those massive kind of ranges. So bear that in mind. Means you have to be a little more flexible with where you're putting your stops. As always, though, trade well. We'll talk again later.